Accumulation stage. The period during which contributions are made to an annuity account.
Accumulation unit. An accounting measure used to determine an annuitant's proportionate interest in the insurer's separate account during an annuity's accumulation deposit stage.
Advertisement. Any promotional material designed for use by newspapers, magazines, billboards, radio, television, telephone recordings, or other public media where the firm has little control over the type of individuals exposed to the material.
Affiliated person. Anyone in a position to influence decisions made in a corporation, including officers, directors, principal stockholders, and members of their immediate families. Their shares are often referred to as control stock.
Agent. 1. An individual or a firm that affects securities transactions for the accounts of others. 2. A person licensed by a state as a life insurance agent. 3. The term used under state law to define a security salesperson who represents a broker-dealer or an issuer when selling or trying to sell securities to the investing public. This individual is considered an agent whether he actually receives or simply solicits orders.
Aggressive investment strategy. A method of portfolio allocation and management aimed at achieving maximum return. Aggressive investors place a high percentage of their investable assets in equity securities and a far lower percentage in safer debt securities and cash equivalents. And they pursue aggressive policies, including margin trading, arbitrage, and option trading.
All or none. A type of best efforts underwriting where the entire amount must be sold or the deal is called off. Synonymous, all or nothing.
Alternative minimum tax, AMT. The requirement to add the income from tax preference items to income above an indexed level. A method to ensure that wealthy persons and corporations pay at least some tax.
American Depositary Receipt, ADR. A negotiable certificate representing a given number of shares of stock in a foreign corporation. It is bought and sold in the American securities markets, just as stock is traded. Synonymous, American Depository Share.
Annual Compliance Review. The annual meeting that all registered representatives and principals must attend, the purpose of which is to review compliance issues.
Annuitant. Person who receives an annuity contract's distribution. Annuity. A contract between an insurance company and an individual, generally guaranteeing lifetime income to the individual on whose life the contract is based, in return for either a lump sum or a periodic payment to the insurance company. The contract holder's objective is usually retirement income.
Annuity unit. An accounting measure used to determine the amount of each payment during an annuity's distribution stage. The calculation takes into account the value of each accumulation unit and such other factors as assumed interest rate and mortality risk. Annuitize. To change an annuity contract from the accumulation, pay-in stage to the distribution, payout stage.
Appreciation. The increase in an asset's value.
Arbitration. A process that allows industry disputes between members, member organizations, their employees, and customers to be heard and settled by either FINRA or a designated arbitration panel. Once the process is agreed to by both parties, there is no appeal.
Ask. The price at which an investor can buy from a broker-dealer. Synonymous, offer.
Asset allocation fund. A mutual fund that splits its investment assets among stocks, bonds, and other vehicles in an attempt to provide a consistent return for the investor.
Associated person of a member, AP. Any employee, manager, director, officer, or partner of a member broker-dealer or another entity, issuer, bank, etc., or any person controlling, controlled by, or in common control with that member.
Assumed interest rate, AIR, 1. The net rate of investment return that must be credited to a variable life insurance policy to ensure that at all times the variable death benefit equals the amount of the death benefit. The AIR forms the basis for projecting payments, but it is not guaranteed. 2. The rate that a variable annuity separate account must earn to keep annuity payments level. If the account earns more than the AIR, the next payment will increase. If it earns less, the next payment will decrease.
Auction market. A market in which buyers enter competitive bids and sellers enter competitive offers simultaneously. The New York Stock Exchange is an auction market. Synonymous, double auction market.
Authorized stock. The number of shares of stock that a corporation may issue. This number of shares is stipulated in the corporation's state-approved charter and may be changed by a vote of the corporation's stockholders.
Automatic reinvestment. An option available to mutual fund shareholders whereby fund dividends and capital gains distributions are automatically reinvested back into the fund. Backdating. The predating of a letter of intent by as much as 90 days to allow an investor to incorporate recent deposits for the purpose of qualifying for a sales load discount, breakpoint, on a purchase of open-end investment company shares.
Back-end load. A commission or sales fee that is charged when mutual fund shares or variable annuity contracts are redeemed. It is typically found with Class B shares and for 1 year with Class C shares. It declines annually, decreasing to zero over an extended holding period, up to 8 years, as described in the prospectus. Synonymous, Contingent Deferred Sales Load, CDSC. Balanced fund. A mutual fund whose stated investment policy is to have at all times some portion of its investment assets in bonds and preferred stock, as well as in common stock, in an attempt to provide both growth and income.
Balanced investment strategy. Method of portfolio allocation and management aimed at balancing risk and return. A balanced portfolio may combine stocks, bonds, packaged products, and cash equivalents.
Banker's acceptance, BA. A money market instrument used to finance international and domestic trade. A banker's acceptance is a check drawn on a bank by an importer or exporter of goods and represents the bank's conditional promise to pay the face amount of the note at maturity, normally less than 3 months.
Basis point. A measure of a bond's yield equal to 1/100 of 1% of yield. A bond whose yield increases from 5.0% to 5.5% is said to increase by 50 basis points.
Bear. An investor who acts on the belief that a security or the market is falling or will fall.
Bear market. A market in which prices of a certain group of securities are falling or are expected to fall.
Best efforts offering. An offering of newly issued securities in which the investment banker acts as an agent of the corporation, promising only his best efforts in making the issue a success, but not guaranteeing the corporation that all shares will be sold or its money for an unsold shares.
Bid. An indication by an investor, a trader, or a dealer of a willingness to buy a security, the price at which an investor can sell to a broker-dealer.
Blue chip stock. The equity issues of financially stable, well-established companies that have demonstrated their ability to pay dividends in both good and bad times. Generally, these are large-cap stocks.
Board of Directors. Individuals elected by stockholders to establish corporate management policies. A board of directors decides, among other issues, if and when dividends will be paid to stockholders.
Bond. An issuing company's or government's legal obligation to repay the principal of a loan to bond investors at a specified future date. Usually issued with par or face values of $1,000, representing the amount of money borrowed. The issuer promises to pay a percentage of the par value as interest on the borrowed funds. The interest payment is stated on the face of the bond at issue.
Bond fund. A mutual fund whose investment objective is to provide stable income with minimal capital risk. It invests in income-producing instruments, which may include corporate, government, or municipal bonds.
Bond rating. An evaluation of the possibility of a bond issuer's default based on an analysis of the issuer's financial condition and profit potential. Standard & Poor's, Moody's Investors Service, and Fitch Investors Service, among others, provide bond rating services.
Bond yield. The annual rate of return on a bond investment. Types of yield include nominal yield, current yield, yield to maturity, and yield to call. Their relationships vary according to whether the bond in question is at a discount, at a premium, or at par.
Branch office. Any location identified by any means to the public as a place where a registered broker-dealer conducts business.
Breakpoint. The schedule of sales charge discounts a mutual fund offers for lump sum or cumulative investments.
Breakpoint sale. The sale of mutual fund shares in an amount just below the level at which the purchaser would qualify for reduced sales charges. Violates FINRA's conduct rules.
Broker. 1. An individual or firm that charges a fee or commission for executing buy and sell orders submitted by another individual or firm. 2. The role of a firm when it acts as an agent for a customer and charges the customer a commission for its services.
Broker-dealer, BD. Person or firm in the business of buying and selling securities. A firm may act as broker, agent, and dealer, principal, but not in the same transaction. Broker-dealers normally must register with the SEC, appropriate SROs, and any state in which they do business.
Bull market. A market in which prices of a certain group of securities are rising or will rise.
Business day. A day on which financial markets are open for trading. Saturdays, Sundays, and legal holidays are not considered business days.
Call. Option contract giving the owner the right to buy a specified amount of an underlying security at a specified price within a specified time.
Callable bond. A type of bond issued with a provision allowing the issuer to redeem the bond before maturity at a predetermined price. Call buyer. Investor who pays a premium for an option contract and receives for a specified time the right to buy the underlying security at a specified price.
Call provision. The written agreement between an issuing corporation and its bondholders or preferred stockholders, giving the corporation the option to redeem its senior securities at a specified price before maturity and under certain conditions.
Call risk. The potential for a bond to be called before maturity, leaving the investor without the bond's current income. As this is more likely during times of falling interest rates, the investor may not be able to reinvest his principal at a comparable rate of return.
Call writer. Investor who receives a premium and takes on for a specified time the obligation to sell the underlying security at a specified price at the call buyer's discretion. Capital. Accumulated money or goods available for use in producing more money or goods.
Capital appreciation. A rise in an asset's market price.
Capital gain. Profit realized when a capital asset is sold for a higher price than the purchase price.
Capital gains distributions. Payments made to mutual fund shareholders of gains realized on the sale of the fund's portfolio securities. These amounts, if any, are paid once a year. Capitalization. The sum of a corporation's long-term debt, stock, and surpluses.
Capital loss. The loss incurred when a capital asset is sold for a lower price than the purchase price. Cash account. An account in which the customer is required by the SEC's Regulation T to pay in full for securities purchased no later than 2 days after the standard payment period set by FINRA's Uniform Practice Code. Synonymous, special cash account.
Cash dividend. Money paid to a corporation's stockholders out of the corporation's current earnings or accumulated profits. The board of directors must declare all dividends.
Cash equivalent. A security that can be readily converted into cash. Examples include treasury bills, certificates of deposit, and money market instruments and funds.
Cash transaction. A settlement contract that calls for delivery and payment on the same day the trade is executed. Payment is due by 2:30 p.m. Eastern Time or within 30 minutes of the trade if it occurs after 2:00 p.m. Eastern Time. Synonymous, cash trade.
Certificate. A paper document used to evidence ownership of or creditorship in a corporation.
Churning. Excessive trading in a customer account by a registered representative who ignores customer interests and seeks only to increase commissions. Violates FINRA's conduct rules. Synonymous, overtrading.
Class A share. A class of mutual fund share issued with a front-end sales load.
Class B share. A class of mutual fund share issued with a back-end load.
Class C share. A class of mutual fund share issued with a level load.
Close. The price of the last transaction for a particular security on a particular day.
Closed-end management company. An investment company that issues a fixed number of shares in an actively managed portfolio of securities. The shares may be of several classes and are traded in the secondary marketplace, either on an exchange or over the counter. The shares market price is determined by supply and demand, not by NAV.
Code of Arbitration Procedure. FINRA's formal method of handling securities-related disputes or clearing controversies between members, public customers, clearing corporations, or clearing banks. Such disputes involve violations of the Uniform Practice Code rather than the conduct rules. Any claim, dispute, or controversy between member firms or associated persons must be submitted to arbitration.
Code of Procedure, COP. FINRA's formal procedure for handling trade practice complaints involving violations of the conduct rules. The Department of Enforcement, DOE, is the first body to hear and judge complaints.
Collateralized mortgage obligation, CMO. A mortgage-backed corporate security. Unlike pass-through obligations issued by Fannie Mae and Ginnie Mae, its yield is not guaranteed and it does not have the federal government's backing. These issues attempt to return interest and principal at a predetermined rate.
Combination fund. An equity mutual fund that attempts to combine the objectives of growth and current yield by dividing its portfolio between companies that show long-term growth potential and companies that pay high dividends.
Commercial paper. An unsecured short-term promissory note issued by a corporation for financing accounts receivable and inventories. It is usually issued at a discount reflecting prevailing market interest rates. Maturities range up to 270 days.
Commission. A service charge an agent assesses in return for arranging a securities purchase or sale. A commission must be fair and reasonable, considering all the relevant factors of the transaction.
Common stock. A security that represents ownership in a corporation. Holders of common stock exercise control by electing a board of directors and voting on corporate policy.
Common stock fund. This is a mutual fund portfolio that consists primarily of common stocks. The emphasis of these portfolios is usually on growth.
Compliance department. The department within a brokerage firm that oversees the firm's trading and market-making activities. It ensures that the firm's employees and officers abide by the rules and regulations of the SEC, exchanges, and SROs.
Concession. The profit per bond or share that an underwriter allows the seller of new issue securities. The selling group broker-dealer purchases the securities from the syndicate member at the public offering price minus the concession. Synonymous, reallowance.
Conduct rules. A set of rules established by NASD, now FINRA, regulating the ethics employed by members in the conduct of their business.
Conduit theory. Means for an investment company to avoid taxation on net investment income distributed to shareholders. If a mutual fund acts as a conduit for the distribution of net investment income, it may qualify as a regulated investment company and be taxed only on the income it retains. Synonymous, pipeline theory.
Confirmation. Printed document that states the trade date, settlement date, and money due from or owed to a customer. It is sent or given to the customer on or before the settlement date.
Constant dollar plan. A defensive investment strategy in which the total sum of money invested is kept constant, regardless of any price fluctuation in the portfolio. As a result, the investor sells when the market is high and buys when it is low.
Consumer Price Index, CPI. Measure of price changes in consumer goods and services used to identify periods of inflation or deflation.
Contractual plan. A type of accumulation plan in which an individual agrees to invest a specific amount of money in the mutual fund during a specific time period. Synonymous, penalty plan, prepaid charge plan.
Control person. 1. A director, officer, or another affiliate of an issuer. 2. A stockholder who owns at least 10% of any class of a corporation's outstanding securities.
Conversion parity. Two securities, one of which can be converted into the other, of equal dollar value. A convertible security holder can calculate parity to help decide whether converting would lead to gain or loss.
Conversion price. The dollar amount of a convertible security's par value that is exchangeable for one share of common stock.
Conversion privilege. A feature the issuer adds to a security that allows the holder to change the security into shares of common stock. This makes the security attractive to investors and, therefore, more marketable.
Conversion ratio. The number of shares of common stock per par value amount that the holder would receive for converting a convertible bond or preferred share. Synonymous, conversion rate.
Conversion value. The total market value of common stock into which a senior security is convertible.
Convertible bond. A debt security usually in the form of a debenture that can be exchanged for equity securities of the issuing corporation at specified prices or rates.
Convertible preferred stock. An equity security that can be exchanged for common stock at specified prices or rates. Dividends may be cumulative or non-cumulative.
Corporate account. An account held in a corporation's name. The corporate agreement, signed when the account is opened, specifies which officers may trade in the account. In addition to standard margin account documents, a corporation must provide a copy of its charter and bylaws authorizing a margin account.
Corporate bond. A debt security issued by a corporation. A corporate bond typically has a par value of $1,000, is taxable, has a term maturity, and is traded on a major exchange.
Corporation. The most common form of business organization in which the organization's total worth is divided into shares of stock, each share representing a unit of ownership. A corporation is characterized by a continuous lifespan and its owner's limited liability.
Cost basis. The price paid for an asset, including any commissions or fees, used to calculate capital gains or losses when the asset is sold.
Coupon bond. A debt obligation with attached coupons representing semi-annual interest payments. The holder submits the coupons to the trustee to receive the interest payments. The issuer keeps no record of the purchaser, and the purchaser's name is not printed on the certificate. Synonymous, bearer bond.
Coverdell Education Savings Account, ESA. ESAs, which are also known as education IRAs, may be established for the purpose of paying qualified education expenses for the designated beneficiary of the account. Although contributions to ESAs are not tax-deductible, the distributions are tax-free as long as the distributions are taken to pay for allowable educational expenses. The maximum annual contribution is $2,000 per beneficiary.
Credit risk. The degree of probability that a bond's issuer will default in the payment of either principal or interest. Synonymous: default risk, financial risk.
Cumulative preferred stock, an equity security that offers the holder any unpaid dividends in arrears. These dividends accumulate and must be paid to the cumulative preferred stockholder before any dividends may be paid to the common stockholders.
Cumulative voting, a voting procedure that permits stockholders either to cast all of their votes for any one candidate or to cast their total number of votes in any proportion they choose. This results in greater representation for minority stockholders.
Current market value, CMV. The worth of the securities in an account. The market value of listed securities is based on the closing prices on the previous business day.
Current yield. The annual rate of return on a security calculated by dividing the interest or dividends paid by the security's current market price.
Custodial account. Account in which a custodian enters trades on behalf of the beneficial owner, usually a minor.
Custodian. 1. An institution or a person responsible for making all investment, management, and distribution decisions in an account maintained in the best interests of another. 2. Mutual funds have custodians responsible for safeguarding certificates and performing clerical duties.
Customer. Any person who opens a trading account with a broker-dealer. A customer may be classified in terms of account ownership, trading authorization, payment method, or types of securities traded.
Customer statement. A document showing a customer's trading activity, positions, and account balance. The SEC requires that customer statements be sent quarterly, but customers generally receive them monthly.
Dealer. 1. An individual or a firm engaged in the business of buying and selling securities for its own account, either directly or through a broker. 2. The role of a firm when it acts as a principal and charges the customer a markup or markdown. Synonymous: principal.
Death benefit provision. This provision of an annuity allows for the payment to a beneficiary the greater of the value of the contributions or the value of the separate account at date of death. The provision is only effective during the accumulation period of the annuity, meaning if the annuitant dies before reaching the annuity payout phase.
Debenture. A debt obligation backed by the issuing corporation's general credit. Synonymous: unsecured bond.
Debt security. A security representing an investor's loan to an issuer such as a corporation, a municipality, the federal government, or a federal agency. In return for the loan, the issuer promises to repay the debt on a specified date and to pay interest.
Declaration date. The date on which a corporation announces an upcoming dividends amount, payment date, and record date.
Default. Failure to pay interest or principal promptly when due.
Defensive investment strategy. A method of portfolio allocation and management aimed at minimizing the risk of losing principal. Defensive investors place a high percentage of their investable assets in bonds, cash equivalents, and stocks that are less volatile than average.
Deferred annuity. An annuity contract that delays payment of income, installments, or a lump sum until the investor elects to receive it.
Deferred compensation plan. A non-qualified retirement plan whereby the employee defers receiving current compensation in favor of a larger payout at retirement, or in the case of disability or death.
Defined benefit plan. A qualified retirement plan that specifies the total amount of money that the employee will receive at retirement.
Defined contribution plan. A qualified retirement plan that specifies the amount of money that the employer will contribute annually to the plan.
Deflation. A persistent and measurable fall in the general level of prices.
Delivery. The change in ownership or in control of a security in exchange for cash. Delivery takes place on the settlement date.
Depression. A prolonged period of general economic decline. Specifically, the GDP declines for at least 6 quarters in a row and is accompanied by high unemployment.
Discount. The difference between the lower price paid for a security and the security's face amount at issue.
Discount bond. A bond that sells at a lower price than its face value.
Discount rate. The interest rate charged by the 12 Federal Reserve banks for short-term loans made to member banks.
Discretion. The authority given to someone other than an account's beneficial owner to make investment decisions for the account concerning the security, the number of shares or units, and/or whether to buy or sell. The authority to decide only timing or price does not constitute discretion.
Discretionary account. An account in which the customer has given the registered representative authority to enter transactions at the representative's discretion.
Discretionary order. An order entered by a registered representative for a discretionary account, allowing him to use his own judgment on the customer's behalf with respect to choice of security, quantity of security, and/or whether the transaction should be a purchase or sale.
Disposable income. DI. The sum that people divide between spending and personal savings.
Distribution. Any cash or other property distributed to shareholders or general partners that arises from their interests in the business, investment company, or partnership.
Distribution stage. The period during which an individual receives distributions from an annuity account. Synonymous, payout stage.
Diversification. A risk management technique that mixes a wide variety of investments within a portfolio, thus minimizing the impact of any one security on overall portfolio performance.
Diversified common stock fund. A mutual fund that invests its assets in a wide range of common stocks. The fund's objectives may be growth, income, or a combination of both.
Diversified management company. As defined by the Investment Company Act of 1940, a management company that meets certain standards for the percentage of assets invested.
Dividend. A distribution of a corporation's earnings. Dividends may be in the form of cash, stock, or property. The board of directors must declare all dividends. Synonymous, stock dividend. Dividends per share. The dollar amount of cash dividends paid on each common share during 1 year.
Dividend yield. Annual rate of return on a common or preferred stock investment. Yield is calculated by dividing the annual dividend by the stock's purchase price. Dollar cost averaging. A system of buying mutual fund shares in fixed dollar amounts at regular fixed intervals, regardless of the share's price. The investor purchases more shares when prices are low and fewer shares when prices are high, thus lowering the average cost per share over time.
Donor. Person who makes a gift of money or securities to another. Once a gift is donated, the donor gives up all rights to it.
Dow Jones Industrial Average, DJIA. The most widely used market indicator, composed of 30 large, actively traded issues of industrial stocks.
Earned income. Income derived from active participation in a trade or business, including wages, salary, tips, commissions, and bonuses.
Earnings per share, EPS. A corporation's net income available for common stock divided by its number of shares of common stock outstanding. Synonymous, primary earnings per share.
Effective date. The date the registration of an issue of securities becomes effective, allowing the underwriters to sell the newly issued securities to the public and confirm sales to investors who have given indications of interest. Equity security. A security representing ownership in a corporation or another enterprise. Examples of equity securities include common and preferred stock, interests in a limited partnership or joint venture, securities that carry the right to be traded for equity securities, such as convertible bonds, rights, and warrants, and put and call options on equity securities.
Employee Retirement Income Security Act of 1974, ERISA, the law that governs the operation of most corporate pension and benefit plans. Estate tax, tax imposed by a state or the federal government on the assets a person possesses at the time of death.
Exchange, Any organization, association, or group of persons that maintains or provides a marketplace in which securities can be bought and sold. An exchange need not be a physical place, and several strictly electronic exchanges do business around the world.
Exchange-listed security. A security that has met certain requirements and has been admitted to full trading privileges on an exchange. The New York Stock Exchange, the American Stock Exchange, and regional exchanges set listing requirements for volume of shares outstanding, corporate earnings, and other characteristics. Exchange-listed securities can also be traded in the third market, the market for institutional investors.
Exchange privilege, a feature offered by a mutual fund allowing an individual to transfer an investment in one fund to another fund under the same sponsor without incurring an additional sales charge.
Ex-date. The first date on which a security is traded that the buyer is not entitled to receive distributions previously declared. Synonymous. Ex-dividend date.
Exempt security. A security exempt from the registration requirements, although not from the anti-fraud requirements, of the Securities Act of 1933. Examples include U.S. government securities and municipal securities.
Exercise. To effect the transaction offered by an option, a right, or a warrant. For example, an equity call holder exercises a call by buying 100 shares of the underlying stock at the agreed-upon price within the agreed-upon time period.
Exercise price. Cost per share at which an option or a warrant holder may buy or sell the underlying security. Synonymous, strike price.
Expense ratio. A ratio for comparing a mutual fund's efficiency by dividing the fund's expenses by its net assets.
Face amount certificate company, FAC. An investment company that issues certificates obligating it to pay an investor a stated amount of money, the face amount, on a specific future date. The investor pays into the certificate in periodic payments or in a lump sum.
Federal Deposit Insurance Corporation, FDIC. The government agency that provides deposit insurance for member banks and prevents bank and thrift failures.
Federal Home Loan Bank, FHLB. A government-regulated organization that operates a credit reserve system for the nation's savings and loan institutions.
Federal Home Loan Mortgage Corporation, FHLMC. A publicly traded corporation that promotes the nationwide secondary market in mortgages by issuing mortgage-backed pass-through debt certificates. Synonymous, Freddie Mac.
Federal National Mortgage Association, FNMA. A publicly held corporation that buys conventional mortgages and mortgages from government agencies, including the Federal Housing Administration, Department of Veterans Affairs, and Farmers Home Administration. Synonymous, Fannie Mae.
Federal Open Market Committee, FOMC. A committee that makes decisions concerning the Fed's operations to control the money supply.
Federal Reserve Board, FRB. A 7-member group that directs the operations of the Federal Reserve System. The President appoints board members subject to congressional approval.
Fictitious quotation. A bid or an offer published before being identified by source and verified as legitimate. A fictitious quote may create the appearance of trading activity where none exists. Violates the FINRA conduct rules.
Fiduciary. A person legally appointed and authorized to hold assets in trust for another person and manage those assets for that person's benefit.
Filing date. The day on which an issuer submits to the SEC the registration statement for a new securities issue.
Final prospectus. The legal document that states a new issue securities price, delivery date, and underwriting spread, as well as other material information. It must be given to every investor who purchases a new issue of registered securities.
Financial Industry Regulatory Authority, FINRA. Formed in July 2007 by merger of the National Association of Securities Dealers, NASD, and New York Stock Exchange Regulation, Incorporated, It is the self-regulatory organization, SRO, for the over-the-counter securities market and for members of the New York Stock Exchange.
FINRA rules. The Code of Procedure, Code of Arbitration Procedure, and Uniform Practice Code by which the Financial Industry Regulatory Authority regulates the OTC and New York Stock Exchange markets.
Firm commitment underwriting. An underwriting where the underwriter buys the entire issue from the issuer at an agreed-upon price and then proceeds to sell the issue. The issuer has a firm commitment that all shares are sold because the entire issue is bought by the underwriter.
Firm quote. The actual price at which a trading unit of a security, such as 100 shares of stock or 5 bonds, may be bought or sold. All quotes are firm quotes unless otherwise indicated.
First in, first out, FIFO. An accounting method used to assess a company's inventory in which it is assumed that the first goods acquired are the first to be sold. The same method is used by the IRS to determine cost basis for tax purposes.
Fiscal policy. The federal tax and spending policies set by Congress or the President. These policies affect tax rates, interest rates, and government spending in an effort to control the economy.
Fixed annuity. An insurance contract in which the insurance company makes fixed dollar payments to the annuitant for the term of the contract, usually until the annuitant dies. The insurance company guarantees both earnings and principal. Synonymous: fixed dollar annuity, guaranteed dollar annuity.
Flexible premium policy. A variable or whole life insurance contract that permits the holder to adjust the premium payments and death benefit according to changing needs. Generally referred to as universal life.
Forward pricing. The valuation process for mutual fund shares, whereby an order to purchase or redeem shares is executed at the price determined by the portfolio valuation calculated after the order is received. Portfolio valuations occur at least once per business day.
Fourth market. The exchange where securities are traded directly from one institutional investor to another without a brokerage firm's services, primarily through the use of an ECN, electronic communications network, such as Instinet. 401k plan. A tax-deferred defined contribution retirement plan offered by an employer.
403b plan. A tax-deferred annuity retirement plan available to employees of public schools and certain nonprofit organizations. Fractional share. A portion of a whole share of stock. Mutual fund shares are frequently issued in fractional amount.
Fraud. The deliberate concealment, misrepresentation, or omission of material information or the truth, so as to deceive or manipulate another party for unlawful or unfair gain.
Front-end load. 1. Mutual fund commission or sales fee charged at the time shares are purchased. The load is added to the share's net asset value when calculating the POP, public offering price. 2. System of sales charge for contractual plans permitting up to 50% of the first year's payments to be deducted as a sales charge. Investors have a right to withdraw from such a plan, but restrictions apply if this occurs.
Full power of attorney. A written authorization for someone other than an account's beneficial owner to make deposits and withdrawals and to execute trades in the account.
Full trading authorization. An authorization usually provided by a full power of attorney for someone other than the customer to have full trading privileges in an account.
General account. The account that holds all of an insurer's assets other than those in separate accounts. The general account holds the contributions paid for traditional life insurance contracts.
General obligation bond, GO. A municipal debt issue backed by the full faith, credit, and taxing power of the issuer for payment of interest and principal. Synonymous: full faith and credit bond.
Generic advertising. Communications with the public that promote securities as investments, but that do not mention the name of any specific securities.
Good delivery. Proper delivery by a selling firm to the purchaser's office of certificates that are negotiable without additional documentation and that are in units acceptable under the Uniform Practice Code.
Government National Mortgage Association, GNMA, a wholly government-owned corporation that issues pass-through mortgage debt certificates backed by the full faith and credit of the U.S. government. Synonymous, Ginnie Mae.
Government security. A debt obligation of the U.S. government backed by its full faith, credit, and taxing power and regarded as having no risk of default. The government issues short-term Treasury bills, medium-term Treasury notes, and long-term Treasury bonds.
Gross domestic product, GDP. Total value of goods and services produced in a country during 1 year. Includes consumption, government purchase, investments, exports minus imports.
Growth and Income Fund. A mutual fund whose aim is to provide for a degree of both income and long-term growth.
Growth Fund. A diversified common stock fund that has capital appreciation as its primary goal. It invests in companies that reinvest most of their earnings for expansion, research, or development.
Growth stock. A relatively speculative issue that is believed to offer significant potential for capital gains. It often pays low dividends and sells at a high price-earnings ratio.
Guaranteed security. A bond or stock guaranteed as to payment of principal, interest, or dividends by a third party other than the issuer.
Hedge fund. A form of investment company which, as a regular policy, hedges its market commitments. It does this by holding securities it believes are likely to increase in value and at the same time is short other securities it believes are likely to decrease in value. The sole objective is capital appreciation. This type of fund is highly aggressive and is generally not available to ordinary investors.
Holder. The owner of a security.
Immediate annuity. An insurance contract purchased for a single premium that starts to pay the annuitant immediately following its purchase.
Immediate family. A parent, mother-in-law or father-in-law, husband or wife, child, brother or sister, or another relative supported financially by a person associated with the securities industry.
Income bond. A debt obligation that promises to repay principal in full at maturity. Interest is paid only if the corporation's earnings are sufficient to meet the interest payment and if the board of directors declares the interest payment. Income bonds are usually traded flat.
Income fund. Mutual fund that seeks to provide stable current income by investing in securities that pay interest or dividends.
Income statement. The summary of a corporation's revenues and expenses for a specific fiscal period.
Individual retirement account. IRA. Retirement investing tool for employed individuals that allows an annual contribution of 100% of earned income up to an indexed dollar maximum. Some or all of the contribution may be deductible from current taxes, depending on the individual's adjusted gross income and coverage by employer-sponsored qualified retirement plans. Persons age 50 and over make an additional or catch-up contribution, which is also indexed.
Industrial Development Revenue Bond, IDB. In general, securities issued by a state, local government, or development agency to finance the construction or purchase of industrial, commercial, or manufacturing facilities to be purchased by or leased to a private user. IDBs are backed by the credit of the private user and generally are not considered liabilities of the governmental issuer, although in some jurisdictions they may also be backed by an issuer with taxing power.
Inflation. A persistent and measurable rise in the general level of prices.
Initial public offering, IPO. A corporation's first sale of common stock to the public.
Inside information. Material information that has not been disseminated to or is not readily available to the general public.
Insider. Any person who possesses or has access to material non-public information about a corporation. Insiders include directors, officers, and stockholders who own more than 10% of any class of equity security of a corporation.
Insider Trading and Securities Fraud Enforcement Act of 1988. Legislation that defines what constitutes the illicit use of non-public information in making securities trades and the liabilities and penalties that apply. Synonymous, Insider Trading Act.
Institutional account. Account held for the benefit of others. Examples of institutional accounts include banks, trusts, pension and profit-sharing plans, mutual funds, and insurance companies.
Institutional investor. A person or an organization that trades securities in large enough share quantities or dollar amounts that it qualifies for preferential treatment and lower commissions. An institutional order can be of any size. Institutional investors are covered by fewer protective regulations since it is assumed they are more knowledgeable and more able to protect themselves.
Interest. The charge for the privilege of borrowing money, usually expressed as an annual percentage rate.
Interest rate risk. The risk associated with investments relating to the sensitivity of price or value to fluctuation in the current level of interest rates. Also, the risk that involves the competitive cost of money. This term is generally associated with bond prices, but it applies to all investments. Bonds carry interest rate risk because if interest rates rise, outstanding bonds will not remain competitive unless their yields and prices adjust to reflect the current market.
Internal Revenue Code, IRC. Legislation that defines tax liabilities and deductions for U.S. taxpayers.
Investment advisor. 1. Person who makes investment recommendations in return for a flat fee or a percentage of assets managed. 2. For an investment company, the person who bears the day-to-day responsibility of investing the cash and securities held in the fund's portfolio in accordance with objectives stated in the fund's prospectus.
Investment Advisors Act of 1940. Legislation governing who must register with the SEC as an investment advisor.
Investment banking business. A broker, dealer, or municipal or government securities dealer that underwrites or distributes new issues of securities as a dealer, or that buys and sells securities for the accounts of others as a broker. Synonymous investment securities business.
Investment company. A company engaged in the business of pooling investors' money and trading in securities for them. Examples include face amount certificate companies, unit investment trusts, and management companies.
Investment Company Act of 1940. Congressional legislation regulating companies that invest and reinvest in securities. The act requires an investment company engaged in interstate commerce to register with the SEC.
Investment grade. The broad credit designation given to bonds which have a high probability of being paid and minor, if any, speculative features. Bonds rated BBB or higher by Standard & Poor's Corporation or BAA or higher by Moody's Investors Service Incorporated are deemed by those agencies to be investment grade.
Investment grade security. A security to which the rating services, Standard & Poor's, Moody's, etc., have assigned a rating of BBB/BAA or above.
Investment objective. Any goal a client hopes to achieve through investing. Examples include current income, capital growth, and preservation of capital.
Investor. An individual who purchases an asset or security with the intent of profiting from the transaction.
IRA rollover. The reinvestment of assets that an individual receives as a distribution from a qualified tax-deferred retirement plan into an individual retirement account within 60 days of receiving the distribution. The individual may reinvest the entire sum or a portion of the sum, but any portion not reinvested is taxed as ordinary income.
IRA transfer. The direct reinvestment of retirement assets from one qualified tax-deferred retirement plan to an individual retirement account. The account owner never takes possession of the assets, but directs that they be transferred directly from the existing plan custodian to the new plan custodian.
Issue. Can be any of a company's class of securities or the act of distributing them.
Issued stock. Equity securities authorized by the issuer's registration statement and distributed to the public.
Issuer. The entity, such as a corporation or municipality, that offers or proposes to offer its securities for sale.
Joint account. an account in which two or more individuals possess some form of control over the account and may transact business in the account. The account must be designated as either tenants in common or joint tenants with right of survivorship.
Joint life with last survivor. An annuity payout option that covers two or more people with annuity payments continuing as long as one of the annuitants remains alive.
Joint tenants with right of survivorship, JTWROS. A form of joint ownership of an account whereby a deceased tenant's fractional interest in the account passes to the surviving tenants. It is used almost exclusively by husbands and wives.
KEO plan. A qualified tax-deferred retirement plan for persons who are self-employed and unincorporated or who earn extra income through personal services aside from their regular employment. Synonymous, HR 10 plan.
Know your customer rule. Colloquial expression for the requirement to compile adequate suitability information about your customers.
Large cap. A measurement of a stock's market capitalization. These stocks have market cap in excess of $10 billion.
Last in, first out. LIFO. 1. An accounting method used to assess a corporation's inventory in which it is assumed that the last goods acquired are the first to be sold. 2. The method used to determine cost basis for tax purposes. The IRS designates last in, first out as the order in which sales or withdrawals from an investment are made.
Letter of intent, LOI. A signed agreement allowing an investor to buy mutual fund shares at a lower overall sales charge based on the total dollar amount of the intended investment. An LOI is valid only if the investor completes the terms of the agreement within 13 months of signing the agreement. A letter of intent may be backdated 90 days. Synonymous, statement of intention, SIO.
Liability. A legal obligation to pay a debt owed. Current liabilities are debts payable within 12 months. Long-term liabilities are debts payable over a period of more than 12 months.
Life annuity, straight life. An annuity payout option that pays a monthly check over the annuitant's lifetime.
Life annuity with period certain. An annuity payout option that guarantees the annuitant a monthly check for a certain time period, and thereafter until the annuitant's death. If the annuitant dies before the time period expires, the payments go to the annuitant's named beneficiary.
Life settlement. The sale of a life insurance policy in the secondary market. When the policy being sold is variable life, it is treated as the sale of a security subject to all federal and FINRA regulations.
Limited power of attorney. A written authorization for someone other than an account's beneficial owner to make certain investment decisions regarding transactions in the account.
Limited principal, Series 26. A person who has passed an examination attesting to the knowledge and qualifications necessary to supervise a broker-dealer's business in a limited area of expertise.
Limited representative, Series 6. A person who has passed an examination attesting to the knowledge and qualifications necessary to sell certain specified investment products.
Limited trading authorization. An authorization usually provided by a limited power of attorney for someone other than the customer to have trading privileges in an account. These privileges are limited to purchases and sales. Withdrawal of assets is not authorized.
Liquidity. The ease with which an asset can be converted to cash in the marketplace.
Listed security. A stock, bond, or security that satisfies certain minimum requirements and is traded on a regional or national securities exchange such as the New York Stock Exchange.
Long-term gain. Profit earned on the sale of a capital asset that has been owned for more than 12 months.
Long-term loss. Loss realized on the sale of a capital asset that has been owned for more than 12 months.
Maloney Act. An amendment enacted in 1938 to broaden the Securities Exchange Act of 1934. The amendment provided for the creation of a self-regulatory organization, the NASD, for the specific purpose of supervising the over-the-counter securities market.
Management company. An investment company, either open-end or closed-end, that trades various types of securities in a portfolio in accordance with specific objectives stated in the prospectus.
Management fee. Amount paid to the investment manager for its services in the supervision of the investment company's affairs. This fee is set as a percentage of the company's net assets.
Margin. The amount of equity contributed by a customer as a percentage of the current market value of the securities held in a margin account. Marketability. The ease with which a security can be bought or sold, having a readily available market for trading.
Market maker. A dealer willing to accept the risk of holding a particular security in its own account to facilitate trading in that security.
Market risk. The potential for an investor to experience losses owing to day-to-day fluctuations in the prices at which securities can be bought or sold.
Market value. Price at which investors buy or sell a share of common stock or a bond at a given time. Market value is determined by buyer and seller interaction. Material information. Any fact that could affect an investor's decision to trade a security. Maturity
date. Date on which a bond's principal is repaid to the investor and future interest payments cease.
Member. 1. Of the New York Stock Exchange, one of the individuals owning a seat on the exchange. 2. Of the Financial Industry Regulatory Authority, any broker or dealer admitted to membership in the authority.
Membership. Members of FINRA, one of the exchanges, another SRO, or a clearing corporation.
Midcap refers to the market capitalization of a company that ranges between $2 and $10 billion.
Minimum death benefit. The amount payable under a variable life insurance policy upon the policy owner's death, regardless of the separate account's investment performance. The insurance company guarantees the minimum amount.
Monetary policy. The Federal Reserve Board's actions that determine the size and rate of the money supply's growth, which in turn affects interest rates.
Money market. The securities market that deals in short-term debt. Money market instruments are very liquid forms of debt that mature in less than 1 year. Treasury bills make up the bulk of money market instruments.
Money market fund. A mutual fund that invests in short-term debt instruments. The fund's objective is to earn interest while maintaining a stable net asset value of $1 per share. Always sold with no load, the fund may also offer check writing privileges and low opening investment minimums.
Money market instruments. These are obligations that are commonly traded in the money market. These instruments are generally short-term and highly liquid. In addition to certain U.S. government securities such as T-bills, the following are commonly traded in the money market. Banker's Acceptance, or BA. Certificate of Deposit, or CD. Commercial paper. Eurodollar deposit. Repurchase agreement, or repo.
Mortality guarantee. All annuity contracts, fixed and variable, contain a mortality guarantee. This is the insurance company guarantee that the annuitant will receive payments as long as he lives. There is a charge made against the account as an operating expense to cover the cost of this guarantee. Mutual funds do not have a mortality guarantee.
Municipal bond. A debt security issued by a state, a municipality, or another subdivision, such as a school, park, sanitation, or another local taxing district, to finance its capital expenditures. Such expenditures might include the construction of highways, public works, or school buildings. Synonymous: municipal security.
Municipal bond fund. Mutual fund that invests in municipal bonds and operates either as a unit investment trust or an open-end fund. The fund's objective is to maximize federally tax-exempt income.
Mutual fund. An investment company that continuously offers new equity shares in an actively managed portfolio of securities. All shareholders participate in the fund's gains or losses. The shares are redeemable on any business day at the net asset value. Each mutual fund's portfolio is invested to match the objectives stated in the prospectus. Synonymous: open-end investment company, open-end management company.
Mutual fund custodian. A national bank, stock exchange member firm, trust company, or another qualified institution that physically safeguards the securities a mutual fund holds. It does not manage the fund's investments. Its function is solely clerical. Par. The dollar amount the issuer assigns to a security. For an equity security, par is usually a small dollar amount that bears no relationship to the security's market price. For a debt security, par is the amount repaid to the investor when the bond matures, usually $1,000. Synonymous, face value, principal, stated value.
Parity. When a convertible security, bond, or preferred stock is selling at the same price as the value of the converted common stock, the two are said to be at parity, equality.
Participating preferred stock. Preferred stock that is entitled to its stated dividend and also to additional dividends as a specified percentage of dividends on common stock if declared.
Participation. Provision of the Employee Retirement Income Security Act of 1974 requiring that all employees in a qualified retirement plan be covered within a reasonable time of their hire.
Partnership. A form of business organization in which two or more individuals manage the business and are equally and personally liable for its debts.
Pass-through certificate. Security representing an interest in a pool of conventional, VA, Farmers Home Administration, or other agency mortgages. The pool receives the principal and interest payments, which it passes through to each certificate holder. Payments may or may not be guaranteed.
Payment date. The day on which a declared dividend is paid to all stockholders owning shares on the record date.
Payment period. As defined by the Federal Reserve Board's Regulation T, the period of time corresponding to the regular way settlement period administered by FINRA.
Pension plan. Contract between an individual and an employer, labor union, government entity, or another institution that provides for the distribution of pension benefits at retirement.
Period certain annuity. Settlement option that allows the annuitant to receive payments for as long as he lives, but also designates a minimum guaranteed period, for example 10 or 15 years, for which he will receive payments. If death occurs during this guaranteed period, then payments will continue for the remaining years of the period certain to a stated beneficiary.
Periodic payment plan. A mutual fund sales contract in which the customer commits to buying shares in the fund on a periodic basis over a long period in exchange for a lower minimum investment. Technical name for a contractual plan.
Person. As defined in securities law, an individual, corporation, partnership, association, fund, joint stock company, unincorporated organization, trust, government, or political subdivision of a government.
Point. A measure of a bond's price. $10 or 1% of the par value of $1,000.
Portfolio income. Earnings from interest, dividends, and capital gains.
Portfolio manager. The entity responsible for investing a mutual fund's assets, implementing its investment strategy, and managing day-to-day portfolio trading. Synonymous, fund manager.
Position. The amount of a security either owned, a long position, or owed, a short position, by an individual or dealer.
Preemptive right. A stockholder's legal right to maintain proportionate ownership by purchasing newly issued shares before the new stock is offered to the public.
Preferred stock. An equity security that represents ownership in a corporation. It is issued with a stated dividend, which must be paid before dividends are paid to common stockholders. It generally carries no voting rights.
Preferred stock fund. Mutual fund with investment objective of stable income and minimal capital risk. Invests in income-producing instruments like preferred stock.
Preliminary prospectus. An abbreviated prospectus that is distributed while the SEC is reviewing an issuer's registration statement. It contains all of the essential facts about the forthcoming offering except the underwriting spread, final public offering price, and date on which the shares will be delivered. Synonymous. Red herring.
Premium. 1. The excess of market price over par value in a bond price. 2. The price of an option agreed upon by the buyer and seller through their representatives on the floor of an exchange. The premium is paid by a buyer to a seller.
Primary offering. The initial sale of a security. All further trades are in the secondary market.
Prime rate. Interest rate commercial banks charge their prime or most creditworthy customers, generally large corporations.
Principal. A person who trades for his own account in the primary or secondary market.
Principal transaction. A transaction in which a broker-dealer either buys securities from customers and takes them into its own inventory, or sells securities to customers from its inventory.
Private placement. An offering of new issue securities that complies with Regulation D of the Securities Act of 1933.
Profit-sharing plan. An employee benefit plan established and maintained by an employer, whereby the employees receive a share of the business's profits.
Proxy. A limited power of attorney from a stockholder authorizing another person to vote on stockholder issues according to the first stockholder's instructions.
Prudent investor rule. A legal maxim that restricts discretion in a fiduciary account to only those investments that a reasonable and prudent person might make.
Public offering. The sale of an issue of common stock, either by a corporation going public or by an offering of additional shares.
Public offering price, POP. 1. The price of new shares that is established in the issuing corporation's prospectus. 2. The price to investors for mutual fund shares equal to the net asset value plus the sales charge.
Put. Option contract giving the owner the right to sell a certain amount of an underlying security at a specified price within a specified time.
Put buyer. Investor who pays a premium for an option contract and receives, for a specified time, the right to sell the underlying security at a specified price.
Put writer. Investor who receives a premium and takes on for a specified time the obligation to buy the underlying security at a specified price at the put buyer's discretion.
Qualified retirement plan. A corporate retirement plan that meets the standards set by the Employee Retirement Income Security Act of 1974. Contributions to a qualified plan are tax deductible. Synonymous, approved plan.
Quotation. The ask or bid a market maker or broker-dealer gives for a particular security. Synonymous. Quote.
Rating service. A company such as Moody's or Standard & Poor's that rates various debt and preferred stock issues for safety of payment of principal, interest, or dividends. The issuing company or municipality pays a fee for the rating.
Real Estate Investment Trust, REIT. A corporation or trust that uses the pooled capital of many investors to invest in direct ownership of either income property or mortgage loans.
Realized gain. Amount a taxpayer earns when they sell an asset at a price in excess of its cost.
Recession. General economic decline defined as the GDP declining for 2 consecutive quarters.
Record date. The date a corporation's board of directors establishes that determines which of its stockholders are entitled to receive dividends or rights distributions.
Redeemable security. A security that the issuer redeems upon the holder's request. Examples include shares in an open-end investment company and UITs.
Redemption. The return of an investor's principal in a security, such as a bond, preferred stock, or mutual fund shares. By law, redemption of mutual fund shares must occur within 7 days of receiving the investor's request for redemption.
Refunding. Retiring an outstanding bond issue at maturity using money from the sale of a new offering.
Registered. Term describing a security that prints the owner's name on the certificate. The owner's name is stored in records kept by the issuer or a transfer agent.
Registered principal. An associated person of a member firm who manages or supervises the firm's investment banking or securities business. This includes any individual who trains associated persons and who solicits business. Unless the member firm is a sole proprietorship, it must employ at least 2 registered principals, one of whom must be registered as a general securities principal and one of whom must be registered as a financial and operations principal. If the firm does options business with the public, it must employ at least 1 registered options principal.
Registered Representative, RR. Associated person engaged in the investment banking or securities business. According to FINRA, this includes any individual who supervises, solicits, or conducts business in securities or who trains people to supervise, solicit, or conduct business in securities. Anyone employed by a brokerage firm who is not a principal and who is not engaged in clerical or brokerage administration is subject to registration and exam licensing as a registered representative. Synonymous agent under state laws. Stockbroker.
Registration Statement. The legal document that discloses all pertinent information concerning an offering of a security and its issuer. It is submitted to the SEC in accordance with the requirements of the Securities Act of 1933, and it forms the basis of the final prospectus distributed to investors.
Regular way. A settlement contract that calls for delivery and payment within a standard payment period from the date of the trade.
Regulated investment company. An investment company to which Subchapter M of the Internal Revenue Code grants special status that allows the flow-through of tax consequences on a distribution to shareholders. If 90% of its income is passed through to the shareholders, the company is not subject to tax on this income.
Regulation T. The Federal Reserve Board regulation that governs customer cash accounts and the amount of credit that brokerage firms and dealers may extend to customers for the purchase of securities. Regulation T currently sets the loan value of marginable securities at 50% and the payment deadline at 2 days beyond regular way settlement.
Retirement account. A customer account established to provide retirement funds.
Return on investment, ROI. Profit or loss resulting from a security transaction, often expressed as an annual percentage rate.
Revenue bond. A municipal debt issue whose interest and principal are payable only from the specific earnings of an income-producing public project.
Right. Security representing a stockholder's entitlement to the first opportunity to purchase new shares issued by the corporation at a predetermined price, normally less than the current market price, in proportion to the number of shares already owned. Rights are issued for a short time only, after which they expire.
Right of accumulation. A benefit offered by a mutual fund that allows the investor to qualify for reduced sales loads on additional purchases according to the fund account's total dollar value.
Right of withdrawal. An Investment Company Act of 1940 provision that allows an investor in a mutual fund contractual plan to terminate the plan within 45 days from the mailing date of the written notice detailing the sales charges that will apply over the plan's life. The investor is then entitled to a refund of all sales charges. Rights offering. An issue of new shares of stock accompanied by the opportunity for each stockholder to maintain a proportionate ownership by purchasing additional shares in the corporation before the shares are offered to the public.
Right to refund. A benefit of a mutual fund front-end load plan that entitles an investor who cancels the plan within 18 months to receive the investment's current value and a refund of sales charges exceeding 15%. Risk. 1. Business or financial risk. The risk that the business in which you have invested money will not do well, sometimes called non-systematic risk because it can be diversified away. 2. Credit or default risk. A risk that applies with debt securities, bonds. The investor has extended credit to the issuer when he buys their bonds. This is the risk that the issuer will be unable to pay the investor back. 3. Liquidity risk. The risk that an investment cannot be easily liquidated or sold. 4. Market risk. The uncertainty that a particular security may fluctuate in price solely due to investor sentiment in the market, sometimes called systematic risk and generally cannot be diversified away. 5. Money rate or interest rate risk. Interest rates and price have an inverse relationship for securities sold primarily for their fixed income, like bonds and preferred stock. This is the risk that as interest rates rise, prices of these securities will fall. 6. Purchasing power or inflation risk. The uncertainty that a dollar will not purchase as much in the future as it does now. This risk is found in all fixed dollar securities, such as bonds and fixed annuities. 7. Reinvestment risk. The risk that a purchaser of a fixed income security incurs that interest rates will lie lower when the purchaser seeks to reinvest income received from the security.
Rollover. The transfer of funds from one qualified retirement plan to another qualified retirement plan. If this is not done within a specified time period, the funds are taxed as ordinary income.
Roth IRA. An IRA that allows tax-free distributions after the investor reaches 59.5 and the account is at least 5 years old. Contribution limits, catch-up contributions, and spousal account provisions are the same as for traditional IRAs. Contributions to a Roth are offset by any contributions to a traditional IRA.
Round lot. A security's nominal unit of trading, which is generally 100 shares of stock or 5 bonds. Taxability. Risk of erosion of investment income through taxation.
Taxable gain. The portion of a sale or distribution of mutual fund shares subject to taxation.
Tax bracket. The percent of tax due on the next dollar of income.
Tax equivalent yield. Rate of return a taxable bond must earn before taxes in order to equal the tax-exempt earnings on a municipal bond.
Tax-exempt bond fund. Mutual fund whose investment objective is to provide maximum tax-free income.
Tax liability. Amount of tax payable on earnings.
Tax-sheltered annuity, TSA. An insurance contract that entitles the holder to exclude all contributions from gross income in the year they are made. These are sold as part of 403(b) plans. Tax payable on the earnings is deferred until the holder withdraws funds at retirement. TSAs are available to employees of public schools, church organizations, and other tax-exempt organizations. Synonymous, tax-deferred annuity.
Tenants in common, TIC. A form of joint ownership of an account whereby a deceased tenant's fractional interest in the account is retained by his estate.
Third-party account. A customer account for which the owner has given power of attorney to a third party. This type of account is prohibited without written authority.
Tombstone. Printed advertisement that solicits indications of interest in a securities offering. Text is limited to basic information about the offering, such as the name of the issuer, type of security, names of the underwriters, and where a prospectus is available. Trade date. Date on which a securities transaction is executed.
Trade confirmation. A printed document that contains details of a transaction, including the settlement date and amount of money due from or owed to a customer. It must be sent to the customer on or before the settlement date. Transfer agent. Person or corporation responsible for recording the names and holdings of registered security owners, seeing that certificates are signed by the appropriate corporate officers, affixing the corporate seal, and delivering securities to the new owners.
Treasury bill. A marketable U.S. government debt security with a maturity of less than 1 year. T-bills are issued through a competitive bidding process at a discount from par. They have no fixed interest rate. Synonymous. T-bill.
Treasury bond. A marketable fixed interest U.S. government debt security with a maturity of more than 10 years. Synonymous. T-bond.
Treasury note. A marketable fixed interest U.S. government debt security with a maturity of between 2 and 10 years. Synonymous. T-note.
Treasury stock. Equity securities that the issuing corporation has issued and repurchased from the public.
Trustee. Person legally appointed to act on a beneficiary's behalf.
12b1 Asset-based fees. An Investment Company Act of 1940 provision that allows a mutual fund to collect a fee for the promotion or sale of or another activity connected with the distribution of its shares. The fee may not exceed 0.75% of average net assets.
20-day cooling off period. A period of 20 calendar days following the filing of a registration statement with the SEC, during which the SEC examines the statement for deficiencies, the issuing corporation negotiates with an underwriting syndicate for a final agreement, and the syndicate prepares for the successful distribution of the impending issue. The final day of the period is normally considered the effective date, unless otherwise stated by the SEC.
Underwriter, an investment banker who works with an issuer to help bring a security to the market and sell it to the public.
Underwriting. The procedure by which investment bankers channel investment capital from investors to corporations and municipalities that are issuing securities.
Underwriting spread. The difference in price between the public offering price and the price an underwriter pays to the issuing corporation. The difference represents the profit available to the syndicate or selling group. Synonymous: underwriting discount, underwriting split.
Uniform Gifts to Minors Act, UGMA. Uniform Transfers to Minors Act, UTMA. Legislation that permits a gift of money or securities to be given to a minor and held in a custodial account that an adult manages for the minor's benefit. Income and capital gains transferred to a minor's name are generally taxed at a lower rate.
Uniform Practice Code. FINRA policies that establish guidelines for member firms' business dealings in securities with other member firms and customers.
Uniform Securities Act, USA. Model legislation for securities industry regulation at the state level. Each state may adopt the legislation in its entirety, or it may adapt it, within limits, to suit its needs.
Unissued stock. That portion of authorized stock not distributed, sold to investors by a newly chartered corporation.
Unit Investment Trust, UIT. An investment company that sells redeemable shares in a professionally selected portfolio of securities. It is organized under a trust indenture, not a corporate charter.
Unrealized capital appreciation or depreciation. The amount by which the market value of portfolio holdings on a given date exceeds or falls short of their cost is considered unrealized gain or loss.
U.S. Government and Agency Bond Fund. A mutual fund whose investment objective is to provide current income while preserving safety of capital through investing in securities backed by the U.S. Treasury or issued by a government agency.
Variable annuity. An insurance contract in which at the end of the accumulation stage, the insurance company guarantees a minimum total payment to the annuitant. The performance of a separate account, generally invested in equity securities, determines the amount of this total payment.
Variable death benefit. The amount paid to a decedent's beneficiary that depends on the investment performance of an insurance company's separate account. The amount is added to any guaranteed minimum death benefit.
Variable life insurance policy. Insurance contract that provides financial compensation to the insured's named beneficiary if the insured dies while the policy is in force. The insurance company guarantees payment of a minimum amount plus an additional sum according to the performance of a separate account, usually invested in equities or other high-yielding securities.
Vesting. 1. An ERISA guideline stipulating that an employee must be entitled to their entire retirement benefits within a certain period of time, even if he no longer works for the employer. 2. The amount of time that an employee must work before retirement or before benefit plan contributions made by the employer become the employee's property without penalty. The IRS and the Employee Retirement Income Security Act of 1974 set minimum requirements for vesting in a qualified plan.
Volatility. The magnitude and frequency of changes in the price of a security or commodity within a given time period.
Voluntary Accumulation Plan. A mutual fund account into which the investor commits to depositing amounts on a regular basis in addition to the initial sum invested.
Voting right. A stockholder's right to vote for members of the BOD, Board of Directors, and on matters of corporate policy, particularly the issuance of senior securities, stock splits, and substantial changes in the corporation's business. A variation of this right is extended to variable annuity contract holders and variable life policy holders who may vote on material policy issues.
Warrant. Security that gives the holder the right to purchase securities from the warrant issuer at a stipulated subscription price, usually long-term instruments with expiration dates years in the future.
Wash sale. Selling a security at a loss for tax purposes and, within 30 days before or after, purchasing the same or a substantially identical security. The IRS disallows the claimed loss.
Withdrawal plan. Benefit offered by a mutual fund whereby a customer receives the proceeds of periodic systematic liquidation of shares in the account. The amounts received may be based on a fixed dollar amount, a fixed number of shares, a fixed percentage, or a fixed period of time.
Writer. The seller of an option contract. An option writer takes on the obligation to buy or sell the underlying security if and when the option buyer exercises the option. Synonymous, seller.
Yield. Rate of return on an investment, often expressed as an annual percentage rate.
Yield curve. A graphic representation of the actual or projected yields of fixed income securities in relation to their maturities.
Yield to maturity, YTM. The rate of return on a bond that accounts for the difference between the bond's acquisition cost and its maturity proceeds, including interest income.
Zero coupon bond. Corporate or municipal debt security traded at a deep discount from face value. The bond pays no interest, but it may be redeemed at maturity for its full face value.